Test. Minute and a half. All right, let's get ready to rock and roll, folks. Hit us with the cues. We've got a good show coming up. A lot of action down here at Cboe. Chicago Future Finance, 80 seconds.
Mic's on.
On. Good afternoon. Welcome to Chicago Future of Finance. I'm Oliver Renick, back in Chi-Town. It's pretty popping down here at Cboe. Markets are ripping. Sort of everything rallied today. Risk on in a pretty big way at a pretty key moment. And after last week of the Money Show, a lot of questions about how folks want to diversify portfolios. And boy, as I put it yesterday, the media tone from what I saw on cable in my hotel room and from that Citrini article that I didn't even bother reading, frankly. I've just heard so much of it at this point, over and over again. The hysteria around, I guess, things that just people are scared of that's new, AI being one of them. Spinning AI into a scary story is a pretty easy one, I suppose, because there's a lot of fictional, scary stuff out there about what artificial intelligence might do. But the bottom line is right now, the most important stuff for the stock market, which I think is what we're mostly concerned about, right? As investors, we're mostly watching the stock market as the gauge for things. Here it is, the most important sector, the most important ticker, in my opinion. And last week, I also said that this looked like it was going to break out. And lo and behold, the SMH, semiconductors, have now put in a fresh all-time high. The beating heart of the stock market, of the U.S. economy, of what sets us apart from the rest of the world, breaks fresh out. You can't really ask for a more important piece of information in making your decisions as an investor and figuring out the likelihood of outcomes for the stock market and your portfolio. Semiconductors represent growth, and to some extent, in many names, you could argue they represent value as well. So the fact that you have SMH making an all-time high today ahead of NVDA earnings is absolutely crucial and a very big dose of bullish narrative. Here's the chart for NVIDIA not waiting for earnings, pushing towards $200 after finding support at 180. You can see the range here for a long time that held. In fact, let me just extend the box that I had there and look at that. These charts, gotta be honest, I kind of love charts. And now you're trying to break out of that range too. So things are looking solid. Look over on the left-hand side, you see a lot of strength elsewhere today. You see silver, whose chart had been making lower highs in the short term, now making a higher high. Phil Streible's going to join me to talk about that here in a moment. We got to talk about the metals. Gold, a popular subject, of course, at the Money Show. yesterday in Las Vegas, and gold stable after putting in its higher highs and higher lows. So gold looks solid, silver looks solid, and of course, because I go by the charts, Bitcoin looking decent. Look at that, low, and behold ye. MicroStrategy, boy, I wish I should have sent myself the image that they had outside the Wynn Club. So this is the kicker. When I was in Vegas the last few days, you can't make it up. Last time I was in Vegas, I ran into Michael himself when I asked him about the short. Actually, it wasn't last time I was in Vegas. That was a Bitcoin conference almost a year ago. I asked him about shorting his company. He said, I'll probably get my face ripped off. I didn't. He did. But this time they had their Strategy World Conference. You just can't make it up. The coiners are always there when I'm there. They can't get away from me, and I can't get away from them. But MicroStrategy had this pretty great poster for their party outside the XS nightclub at the Wynn. So $140 for Master. I would still be sweating if I'm them, no question about it. But Bitcoin and Ethereum finally getting a decent bounce today. This candle for Bitcoin is still operating within this range of the last couple months here, but I think it also deserves a little bit of credit, and that it has found now support. And I think for a lot of people that is going to be very reassuring, because they obviously are looking for this thing to make big moves, and it hasn't, of course, but at least it's no longer breaking down. So the updates today for me on the risk radar are green on stocks and now yellow on BTC. So it had been red for Bitcoin, and I think we can give it some technical appreciation that now you have a range developing in Bitcoin that may or may not join the risk on trend that's happening in stocks. Generally still, you think about Bitcoin as a risk asset, even though it was an asymmetric risk asset, only getting beta to the downside for stocks the last 6 months or whatever. I think generally when you have semiconductors breaking out to an all-time high, which is why stocks are green, the potential for Bitcoin and other risk assets to firm up as well are there. I think gold should probably be green too, to be honest. I kind of forgot to make that change, but here's what the risk radar looked like before. Here's what the risk radar looks like now today. So that's where we're at. I got Mr. Phil Streible joining me from Blue Line Futures. And by the way, the other thing too that's important about gold too, as I bring in Phil, is that that chart had been making higher highs for the last couple weeks. So it just looks like it's in pretty good shape overall. Mr. Streible and the Blue Line Futures crew are experts in the world of commodities. Phil, how you doing, sir? What's going on?
I'm doing great. Thanks for having me on. Yeah, pretty risk on day here across the board. You did have the metals. They were halted for a period of time. So the conspiracy theories surrounding with just a day or two before that expiration and that big rollover, the internet buzz was just feeding with all kinds of different theories out there. But it reopened, and we've got gold, silver, copper all making new highs as of this recording.
The potential for gold, let's start there, Phil. It just seems like it's been the most reliable generally. The chart now going back up and to the right. I know a lot of folks trade GLD, but I'll start just with futures for a moment here. What do you think the potential for this looks like? 5,600 for futures? Take me through it.
I think so. You had a lot of different banks come out, like JP Morgan, Bank of America, revising their price targets higher. You had Bank of America, I believe, with a 6,000 price target. So, I mean, traders are just weighing the uncertainty surrounding U.S. import tariffs, the friction in the Middle East. It makes sense as a portfolio diversifier. You have central banks buy it. It's just widely accustomed, and it's a great asset to have. It's a lack of clarity over U.S. trade policies, the tensions. You got this massive American military buildup. It's really been supporting the precious metals recently. So the basement trade, inflation, dollar depreciation, it's a number of, you just pick it out of a hat on what the reason behind it is. But technically, it looks very strong from here.
Yeah, it looks like it could be really kicking into gear. One of the things that we talked about yesterday with some of the folks at the Money Show is that everybody loves when volatility is to the upside in their asset that they own. But I do wonder to some extent, the reason why gold is gold and not Bitcoin is because, it it's supposed to kind of have a different risk profile, different volatility profile. But the implied volatility for this thing obviously has changed dramatically here over the last several months in a way that I wonder if it changes kind of how it's supposed to work in a portfolio. You know, right now it's working in a good way for gold, but how do you think about it now as balancing against other things when it has this type of, whippiness to it?
Definitely. I mean, position sizing is one of the most important key elements of building any kind of portfolio out there. And gold, realistically, shouldn't see more than a 10% allocation in anyone's portfolio because of the volatility that's going on. So you definitely have to beta adjust your portfolio. The daily average true range is right around like $180 a day on gold. So it does become a little bit, nerve-wracking if you're going to get in there and you're going to hold on to some kind of very large position. So you really want to look at this thing as a portfolio diversifier, but just having small slivers of it. It's a product more, I think, that is beneficial for the dollar cost averaging rather than being a maxi at any type of level. You do see the gold volatility at 35. If it gets over 40, the last time we were over there was when we had that cataclysmic fall in futures prices. And you do have silver volatility screaming up at like 86, 87. And those are just those ranges where you're seeing these 10% moves, these uncharacteristic moves take place.
I've got that IV up for GLT right now, to your point. Just a totally different regime. Now, that being said, though, if just kind of the way the market works these days is we have more appetite for swinginess. We're out there in Vegas talking about zero DTEs and the way people are embracing convexity in options. Obviously, Bitcoin for the last 8 years, people have loved some, have embraced that volatility. So maybe it's just gold's getting a modern makeover.
That entirely could possibly be it. I mean, the number of different products that are being created that are proxies for these different things, these different leverage bets, and then of course those zero DTE options. You could trade options almost every day on the gold futures contract, on the silver contract, and many of these future contracts out there because of the fact you have so many platforms that have taken shape that have allowed people to bet on different products in different ways, anything from sports to politics to, futures contracts and directional moves. So that's going to cause these big gyrations when you see large bets being placed in the market.
Okay. Let's talk silver real quick. 4.25%, a volatility profile that's generally assumed to be a little bit more swingy. So if you're looking for the juice, $120 for SI and maybe 110 for SLV.
Yeah, if you go to from 50 to 50 was really the breakout. It went up to 82.67. It double topped there. That's about a $32 move. And then the last time we consolidated at that 82 level, it extended on up to about 115, 120. So it'd be a good extension upwards on that market. Now you look at the silver market, the ETF outflows that have taken place since the start of the year have continuously taken place, except yesterday you had China kind of comes back online. They buy about 10 million ounces of silver. So ETFs start to come back, but they've never gotten back above those December 31st highs. And it tells you that money managers, fund managers, and everyone else that want to beta adjust their positions realize that there's just too much volatility there. The average true range is like $8.50 and it ballooned up to $12 a day. And the problem is that when I was trying to offload some of the physical side, you would see a lot of these buyers out there at different shops and things like that, just really hesitant to take anything on because they've got to stomach that volatility as well.
And margin requirements, changing. So that kind of tells you that the maybe liquidity is a little thinner in that pool. Hey, Phil, give me a thought on Bitcoin real quick. Is BTC pushing to 69, still within a pretty well-defined, call it, 10,000 point range for the last almost a month now, but I put it yellow on my risk radar just because, I want to be fair to the thing. And if stocks are breaking out, maybe there's still some appetite here. Some people are going to fight for this thing.
You got to get above some key levels. I mean, down 25% year to date, 50% below its all-time highs. Needs a 100% move in order to get back to those highs. 45% of all the coins that have bought are worth less than what the holders have paid. Institutional adoption, I think, is fading. Weeks of ETF outflows have dampened that bull case. I'm not a bull on that market whatsoever. I mean, was it a victim of the momentum rotation trade because of the fact that Bitcoin peaked the last go around right on that January 29th? That's when it broke and started to sell off excessively. That's coincidentally when gold and silver made their all-time highs before they were rug pulled. So Bitcoin's got to have to get some brand new bull case in order to take back off.
Okay, so maybe we get, I don't really know what the bull case is from the macro side. I think it's just whether or not it reclaims its risk properties.
Yeah.
Today's encouraging from that. That's kind of why I'm giving it a chance, is because we're rallying everything today. Bitcoin's got to be a part of that.
That's a volatile move higher. You just mentioned it yourself, that upside volatility is volatility. So this is bringing 7% move to the upside. You know, it's not to say that Bitcoin, you get a miss on NVDA earnings, you get a spike on the volatility index, you get the dollar going back up, and next thing you know, Bitcoin's going to be making a new low, banging in the 50,000, and people are going to be crying again. So this is where you take these types of opportunities, these 7% move higher, things like that, you right size your position, you bring it down to what your allocation model should show.
Okay, nicely said. Good thoughts there. I guess last, the 10-year, since you kind of teased there a little bit of bonds, fascinating chart that I've got going on the 10-year here, getting compressed in this sideways triangle over a couple years and finding yield support here at the hard 4 handle. I've thought a month ago yields were going to go up. I was wrong. Maybe that could still be right. What do you think, Phil?
It's amazing how the yield curve was steepening dramatically and then all of a sudden started flattening, and it tells you that the growth story in the U.S. is starting to fade, that inflation is going to be kind of holding up a little bit more stickier. We're going back into that stagflation type environment. The Fed is completely handcuffed. So a 2% chance they cut rates in March, it's like not priced in. July is like 50-50. You go out to September, that's the first time they got 100% priced in.
Okay. All right. Nice. Good analysis. Phil Streible. Love it. And a couple pretty interesting charts there. It sounds like you're generally a lot more confident in the metals than you are the coins. And it seems like for bonds, we still kind of need some things to fall into place, you know, for that puzzle to come together on what we're going to do with rates. A couple months out still probably, especially if the economy is going to be all right and stocks are going to be making new highs. Phil Streible, Blue Line Futures. Great stuff. Thank you, sir.
Thanks a lot. Thank you.
You got it. You got it. All right, now I know somebody who definitely wants to get those rates cut. Mr. Pete Najarian joining us on the line as well from Market Rebellion. Let me bring him in here as we are cooking stocks. Just a lot of green on this market today. Pete, right? Not bad, eh?
Not so bad, Oliver. I tell you what, I'm loving it because I tend to lean a little bit long, especially under circumstances where I don't really fully comprehend why it's being sold off so much sometimes. So it's been already an interesting week, and we're only 3 days into it, but it certainly has been a wild ride, whether or not you want to look at the S&P 500, and everybody was woe is me and everything was awful, right, on Monday. I mean, it's a terrible thing, you know, Trump did this, Trump did that, whatever. And I don't ever go political, but it's just interesting to see the reactions, Oliver, that we were getting on Monday because of the fact that, okay, well, they're taking down these tariffs. And he said, well, how about 10%? And you know what? Then he came up 15% on Saturday. And, you know, Monday was what it was. We sold off. But here's the interesting thing. You take a look over at the S&P 500 today, from where it was on Monday, and you're up almost over 100 points. So pretty nice move that we're seeing, and you know that's kind of why I tend to still lean a little bit long, because obviously I like what we've seen through earnings. I like what we've seen through some of the other areas of the marketplace that probably don't get talked enough about, but also, and you and I talk about this almost every week, but the Burl Ives trade, it is alive and strong and continuing, and the buying that continues to roll in there, absolutely incredible, whether it's SLV or GLD. It has been unbelievable so far, Oliver. I swear to you. And I know you probably get tired of this whole thing about me talking about silver
No,
and
I
gold.
mean, hey, it is where it is. The trade hasn't stopped. SLV at 82. Where are
Yep.
you seeing the buying action, Pete? How much speculation, how much conviction is there in what you're seeing for options flow?
Huge conviction. If you go look back last Friday, you take a look at where things were, $75, give or take, is where we were. And we had some huge buying there. 17,000 of the 74 calls were getting bought. Then you come back to Monday, 19,000 of the February 80 calls getting bought. I mean, it's something that just continues to hit day after day after day. And we have seen some monstrous trades in there. We had 20,000 calls getting bought just last week as well. Those are already expired, but the movements that we are seeing in silver, and particularly obviously with the SLV being a great way to try to do that whole thing, that options have been absolutely incredible, and they keep coming for it. You'd think that maybe they'd say, okay, we're going to back off a little bit. We're not seeing that at all. And
I thought maybe too, the chart to me was looking a little bit dicey here a couple weeks back, Pete, when it was fighting to hold $65 on SLV. My point was GLD looks like the better version, which I think was correct, but now they look the same basically. Silver's, now making a higher high. So that chart is looking pretty darn good.
Yeah, the chart looks great. And you mentioned gold. How about GLD? Just the movement that we've had out of there. We get hits almost every day, it feels like. As a matter of fact, in just the last couple of days, and more of it today, we had 56,000 of the March 495 calls being bought. That's a pretty nice number. 55,000 of the March 485s were getting bought just the other day. And then 55,000 of the March 505 calls were getting bought just the other day. So we're seeing buyers, we're seeing some, they're mostly spreads still, just to keep some clarity there. We're seeing spreads. They're buying, obviously, and they're going out either $15 higher, $20 higher. That's usually what they're doing. Once in a while, it's only $10. But these spreads, Oliver, just are absolutely extraordinary to see day after day after day. And it just seems like GLD is just, it's almost like, where is it? When we get to 2 o'clock and we haven't seen a GLD trade, it's kind of
like, what's going on?
I go looking around to try to find where it is. But I think that the reality is, today was a great example of that. Just about, 30 minutes ago is when we started to see the 56,000 of these March 495 calls being bought. So it finally hit. It took till, basically the final hour of trade, but they're out there and they're continuing to buy that side of the world. And you know what? It's a place that people feel they can hide a little bit anyway. And so far, so good. It's been a pretty nice ride. Even on days like today where it's going up as strong as it is as far as the other broad part of the market. And, you start seeing some of the names that are moving. And yet gold continues to go higher. And like you said, silver is doing a pretty good job as well.
Yeah, both of them looking good. Bitcoin in it as well. It's just a very encouraging day for risk on and risk appetite overall. So kind of everywhere you look. A few places that I think are overlooked that you've been looking at as well, Pete, you mentioned. Let's go to a few specific names here that you're watching. CoreWeave is one. CRWV, stock that's been range bound but was a real hot trade middle to early last year. And then, kind of fizzled, made some lower highs, made lower lows. What do you see here? What stands out?
Well, what stands out for me is they just keep coming for CoreWeave. Just this week, as a matter of fact, it's been pretty amazing. On Monday, they were buying the March 115 calls, $4. They bought 22,000 of those, Oliver. I mean, some of the size of some of these trades is just extraordinary to see. Just how much the investment that is going into these. The April 130 calls, they paid a little over $5.50, I think, for these. 23,000 of those were bought, and these were just getting traded just yesterday. So, there's not somebody out there saying they're tired of it. They're still seeing that CoreWeave has some potential to the upside, but by the buying that we're seeing, I own a little bit of this because I was so convinced by this unusual option activity, as we call it, moving. It's amazing. They've got their Gen AI, they've got all these things, the cloud platform and so forth, and CoreWeave seems to be a name that people are pretty attracted to, at least for now. We're seeing that now, and they're going to March and April. They're not going out too far, but they are going all the way out to April.
I do see the IV picking up, to your point, going into earnings, right, which are coming out tomorrow. So maybe there's, event possibility here as well. So speaking of that, we got the big dog.
There's the event.
Yeah, NVIDIA. I mean, I kind of love, there's some here in this chart, Pete, that is making the bull in me, breathe it out, snort it out. It feels like we might be getting ready to charge because NVIDIA's breaking out of this range. It hasn't been above 195 in a while. And then you mentioned the S&P 500 too, which is, I had this yellow line at 6,900. And that was the straight midpoint, right? Between 7 and 68, basically. And we kind of gapped above that after a 7-day range as well. So it's kind of almost like getting a little gappy to the upside today in some of these really important names. So tell me what you see in NVIDIA.
Well, the interesting thing is not as much today, but on Monday, we did see towards the end of the trading session, there was a huge buyer, 25,000 of the March 205 calls. Well, those calls have really ripped already based upon the movement that we have seen. And amazing to see that happened. During Monday, stock was only trading about 191 at the time, and they bought 25,000 of these 205s for about 460. Those have jumped up pretty nicely. I think they've doubled so far since that buy, and it's been an incredible move. I still think that the potential is out there, and all of it comes down to this. The numbers themselves are extremely important. I guess the next thing would be, what is the CapEx? Because that is the latest, greatest thing, right? I mean, if your CapEx is really high, that's not been very good in terms of the interpretation from a lot of the folks out there. And so that's something we'll be watching very closely. But I would say that Judson Huang does a great job of controlling the narrative as best as he can. And so we'll see if he's able to do that today as well. It'll be really interesting after the close to see what they have to say, but also some of the questions that he will be answering. He's always been very upfront and a guy who's been very solid about what he's proposed to folks and what to be looking for within his stock. So I'm just looking at it this way. If the numbers are as good as I think that they will be, it makes a lot of sense that this move that they're making right now and this potential of a breakout, it really could be a real potential of a breakout, even much higher. But that being said, we know that over the last couple of weeks, as we've gotten some of these tech names, that CapEx has really been something that pulls these things down pretty quick.
Absolutely. But it could be, it pulls down the hyperscalers, but it might eventually pull up NVIDIA. As they're spending on, they're spending on their hardware. Here's some of the numbers from ChatGPT, speaking of which, powering it all. 70 to 73% annualized earnings growth for NVIDIA, 66% and a half roughly for the year-over-year revenue growth. So their earnings are growing at a faster rate year over year now than the revenue, which is a great story about margins. It's just, even if they miss, it's like they're still doing insane numbers. I remember we had this conversation like 2 years ago, and it was like when they were doing the 200, 300% stuff. And the fact that now we've moved on and they have fallen to 60 to 70% growth is like, how could people be, I just don't understand how you could want to try and fade the broad market or be bearish really anything when this is, the engine. This is really the engine. And there's a lot of different parts to our machine, but this is how it started. It started with NVIDIA, and it is still cranking. The machine is powerful. Yeah,
it's amazing. And you know what? When they actually deliver, and it's not that far away now, we're getting closer to 2:30. So, after the close, it's going to be really interesting to see. Again, I think it does come down to the narrative. It comes down to I think the numbers themselves are going to look really good. I really do. Which is why I'm leaning in that direction. It's why I own some calls in there because A, we're seeing those calls being bought. B, it seems like the right time because the stock has not really been all that much movement, as you and I were talking about earlier. Been pinned down there somewhere in the 190s, the low 190s for a while, and now it's starting to break a little bit. And now will it be able to break even better. And we've seen that in the past, but can it happen again? I think it probably can based upon a lot of the numbers that we are seeing out there, but it's a matter of can they deliver? And I feel pretty confident that they can.
Yeah, I think they will as well. And I think that my personal bias is it seems like things are looking positive for it. Also, the flip side, though, is, if any of it misses, then all right, be aware because we've still seen the S&P 500 pinned in this range. Even though I think the chart looks really good here today, it still hasn't broken out. I think the volatility experts would tell you that there is still a very strong potential for the second derivative type gamma squeeze in either direction. If this range we've been in has to break and peels off, then all right. I do think though that the bias for me would be that it looks like it's going to break to the upside, but still, it is a big piece of the puzzle that needs to fall into place, and it's looking pretty good right now. Pete, thank you very much as always, sir. Much appreciated for your time. Great thoughts.
You're the best, man. Thanks. See ya.
Back at you. Good thoughts on the silver trade, the Barrel Lives trade, and good thoughts on NVIDIA ahead of the report here. All right, going to take a 2-minute innovator buffer break. Then we're coming back. Chris Betcher's got a couple stocks he's looking at. He's kind of been on a burner too, giving us some really good equity pieces to look at. Be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
I fixed it on my end coming through. All right, welcome back here. We got stocks holding in. We did see the bond market sell off a little bit, but crude dipped red. Otherwise, everything is pretty green. Russell 2000, small caps, struggling a tiny little bit here, but remember with NVIDIA on deck, the focus kind of shifts. Everybody's been thinking about rotation the last several months, maybe year to date, perhaps more accurate. We've been thinking about rotation, but when you get NVIDIA on deck, you get semiconductors rallying, you get generally more of a big cap type of leadership. And today we see that with the MAGS ETF back above $63 with 1.5% climb. So the Russell a bit on the slow side of today's session, but we'll give it a pass because you'd kind of rather the big stuff work, honestly, for the index. Joining me, Chris Brecher at TradingNest.tv. What's up, Chris? Looking good.
Hey there. I think the camera looks pretty good now.
Yeah,
Not me,
got
it's
it.
the camera centering.
Oh, that's all right. That's both. So what do you think? I mean, if NVIDIA hits today, does our rotation go bye-bye? The breadth that we've been enjoying as stock traders, you've been bringing to us, picking interesting companies that have been kind of off the beaten path. Yesterday I talked with Nancy Tangler about Walmart, Deere, and the way we've seen new leaders in the market. Does that change if you get your giants like NVIDIA start blowing out numbers again?
Yeah, it's really wild. You've seen like monopoly money where they take it out of NVIDIA, they buy Deere, then all of a sudden Deere's down today and NVIDIA is up, and just really funky stuff like that going on. And right now what I'm seeing is that regardless of what I think, I have to be hedged in some way. And the only reason I'm saying that is because the NASDAQ 50 moving average daily is still rolling over. Now, it could reclaim it like a lot of other things have, but because of that, if I'm going to look for new leadership, I'm going to have to also hedge, and the ones I buy, I'm going to have in a limited risk scenario. And That's why I was talking to you. We were going over actually in our room like 50 different stocks. And the problem is a lot of them that are starting to turn the corner, like RGTI and NNE, they're still in downtrend. So you got to just orient it in a way that if they do go up, you're participating, but if they go down, you're not going to lose that much. And I don't like to have a self-defeating attitude, but they look like they're turning the corner.
Okay. Rigetti, right? That's one you mentioned there, RGTI, after basing out maybe on the chart.
Yeah.
Is that what you're seeing?
Yeah, I'm going more. I know it doesn't sound like a perfect correlation. It's not. But I would take CEG because that was the whole power thing and all that Constellation Energy. Stock went from 400 to 250, and it's had a massive rally. And I really think that some of that is, and it had earnings today, I think that's really helped those other stocks start to bottom. Constellation,
I also think is a pretty interesting one to look at because this is one of those that kind of feeds in on the supply side to the AI story as well. When you go from the energy side, trying to find that kind of tangential auxiliary story, if you will, to the AI one. That was one that had a ton of volatility. The IV right now at 52. So it was volatility to the downside over the last 3 or 4 months. But of course, it was a killer, back in 2024 and really started cooking 2023. So the idea that you could have this kind of long-term uptrend reigniting in some of these trades could be very exciting.
Yeah, I'll tell you right now, it's funny. If you go back to a daily chart, look at the bottom that you saw in February. That's something we're trying to teach all the time. If you go to a daily and really zoom in. We love dojis. And when you go to the downtrend in CEG this year, what you'll see there is that little doji down there, and
this
then
guy?
yeah, beautiful. right at the end. So it lost momentum on the downside. And the key isn't to buy on the doji. The key is the follow-through candle. As you see, the follow-through, that was it. So, I mean, it's gone up, 150 points since then. You didn't have to bet on earnings, but that last, the last move was like 100 points. But that doji and the follow-through the next day is a beautiful thing. And you can use Thinkorswim or FinViz and actually scan for dojis. That doesn't mean you blindly just buy them, but it's a good place to start to look for like entries.
Okay. Tell me what you think about ChatGPT's description. We'll go on a little educational diversion here for a moment, as I always like to do. ChatGPT says a doji candle is a candlestick pattern in technical analysis where the opening price and closing price are nearly the same. Okay, I see. So that's what that was showing us down there, right? Because you've got, it's like that little T, it's like an equidistant candle. It's like a perfect cross almost, right? Because it's opening and closing right at the same place.
Yeah, I tried to get ChatGPT to call it the Brecher doji, but they wouldn't do it. So I was trying. But yeah, I mean, the key is whether it's a reversal pattern with normal candlesticks, it's always about the follow-through candle.
I see. So it's like the next day is the tiebreaker?
Yeah, exactly.
That's cool. That's fun.
And if you went to that and you saw the doji, you probably go to a shorter-term chart to time your entry. So if I saw a doji on a daily, I'd be putting up an hourly chart to try to time my entry. But the beauty of it is the backstop. So if it followed a little on the upside and you buy it, at least you know your backstop. And that's the low of the doji.
Okay, I see. So CEG being the example here, it kind of shows a market finding equilibrium in the short term and then picking a direction. So it's almost like it did a U-turn, And by the way, the IV peaked right at that moment.
Yeah, isn't that amazing? The IV peaked right at the doji. That's amazing.
Right? So I think that's even more compelling that that this is a real move, a real trend, because that means that a lot of directional bets were being put on through the options market and it cleared out in favor to the upside.
Yeah, that's where when you see the follow-through candle, I mean, the IV the next day is still high. You can do a broken wing call fly above the market.
Okay.
And that's what I do is take advantage of that volatility.
Okay. So CEG, pretty gappy and looking good in the last 2 days here. The candles are getting bigger and still going up. NNE was the other one you mentioned. Nuclear trade as well. Was that a doji that it had on, look at this cross here as well?
That's a little rough because it wasn't near big support. It's at some support, but it wasn't the kind of cascading move like you got in CEG. Mm-hmm. So that's why, well, actually, as you're showing it now, the one in the beginning of 26, maybe that was a doji.
Okay.
Yeah, right there.
Yep, right here.
Yeah, there you go.
Stabilized bounce.
I mean, these things are pretty cool.
The idea of trading the nuclear stocks back in favor definitely speaks to the notion of a risk-on market. I definitely think that. So if we get NNE to start rocking the way CEG has already done, then this kind of feels like the good old heydays of AI from, 2024 possibly, with NVIDIA earnings, because that was when we really started thinking, okay, how are we going to power all this stuff? Oh my gosh, the grid's not going to be able to handle it, and NVIDIA went on the monster run. NVIDIA went from the now, $40 range up to above 120, and then, the rest is history, essentially. During that time, we had pretty good strength. That's when they launched the Nukes ETF, which I just pulled up. And then Nukes in UKZ doubled from Jan 24 up to, at the end of the year, basically. So, I mean, this chart also looks like it's about to break out. I see a lot of things in this market, Chris, that look bullish to me.
Yeah, the only thing with like the CEG and the NNE is, as opposed to, let's say, a year ago, is back then the 50 moving averages were sloping straight up. So right now they're still sloping down. So it might take a long time for them to have the go-go kind of moves. I think they'll grind up, but I don't think they'll have the go-go moves until those moving averages start curling back up.
Okay. Nice eyes on the charts. NE, CEG, and I would throw NUKZ into the mix. Good stuff. Good eyes, Chris.
I got one more for you.
Hit me.
That
Sure, hit me. Tell me.
Symbiotic.
Give me a ticker.
SYM. Yeah, Symbiotic. And the reason for that's more news related, because the Commerce Department is going to hold a meeting with robotics makers because of maybe helping them out because of competition from China. And here's another one trying to turn the corner.
Symbiotic, 56 bucks. So I know I'm starting to gather you like to look for things that are basing and trying to turn around. It seems like that have found support. Hey, any pick is a fun trade if it's found support. But I think the nukes and the implications of that trade going into NVIDIA tonight are huge. Thank you, Chris. Appreciate it. Thanks for coming on.
Sure. Thanks for having me on.
You got it. Good stuff. Chris Bretcher, TradingNest.tv, looking at the nukes ahead of NVIDIA. Let's bring it home with with Scott Bauer joining me to take us into the bell here, as we got a big night coming up here. NVIDIA, less than an hour away. Market, NASDAQ, looking really good right now. Got a pretty solid rally happening. And, with the nukes trying to make their move too, could be a sign that we're about to get pumped up again. Coming back with Scotty for Prosper next.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back. We got Scott Bauer joining me from Prosper Trading Academy with 12 minutes into the bell, at which point we have NVIDIA earnings shortly behind. Scott, good to see you again.
Yes, how was Vegas?
It was good. It was good. It was productive. It was profitable.
There you go.
I met some good people, figured out what people are trying to trade right now. A lot of folks kind of thinking about gold, alternative investments. There was actually a surprising amount of talk about crude oil and energy. But overall, I think, most people still are hoping the big tech, carries us. A lot of stock picking, though, for sure. People trying to find individual names.
Yeah, it's kind of tough right now, individual names to, pick a bottom overall, regardless of where you're looking. I think if you want to get back into the tech space, you're probably better off looking at something, more of an index, maybe an SMH, who knows, something like that. But obviously things could change in the next, 15, 20 minutes once we see NVIDIA earnings here, which sure looks like, at least the option market and the paper that we're seeing out there is incredibly bullish. Can that carry the rest of the market? We'll see.
The chart looks bullish to me. The numbers look bullish for NVIDIA, what they're going to expect. And this VIX chart, Scott, that I've been watching here with the uptrending VIX line, I think if this thing breaks to the downside, we are in good shape.
The VIX, you're talking about VIX breaking to the downside, right?
Exactly. VIX, this technical line that's held.
I mean, it's there. You are right. I mean, it is at major support right now. And what's interesting is, look at some of those candles there. We're seeing really big intraday and interday moves recently in the VIX. It was just a couple days ago, we were looking at 22, 23, even some of the futures going out were topped out at like 24, 25. And now all of a sudden, just 2 days later, 3 days later, here we are back at major support. Really interesting, Oliver, is I was over in the VIX pit a little bit earlier. The last couple days, okay, there's been nothing but sellers in the VIX. When I say sellers, I'm talking about big institutional paper coming in, selling calls, selling puts also. Okay, so basically selling VIX premium. Today, some buyers stepping in. Now, I don't look at that as buyers saying, hey, we're looking for the VIX to explode here. I'm looking at that as the vol of the VIX being pretty much very close to what you're showing there with where the VIX is trading, and people just looking at, maybe buying some cheap insurance like we always talk about.
Okay. The cheaper than it was a few days ago. Still above average, though, right? I feel like if we break this line, then maybe we just go to average of VIX first to 16. But those sellers of premium both direction, I guess, then are just kind of expecting us to maybe slip back into something more normal, chop in between range or something like that.
I mean, if you look at the S&Ps where we were in October to where we are now, we're essentially unchanged in a, what seems to be a really volatile market. But if you look at the range here, we are right back to where we were. Yeah. So, I'm not saying that we can't see or shouldn't expect volatility. We should. But take a look at today. We've got S&Ps up less than a bip today. They're up 60 points, but it's 90 basis points, right? Less than 1%. So a VIX, for people watching, a VIX of 16 is equivalent to a 1% daily move in the S&Ps. Okay. Now, what is the VIX made up of? The VIX is made up of the implied volatility of S&P options going out 30 days. So if we are seeing even a 1% move in the S&Ps, okay, let's say 1% is the average, the VIX is still too high.
And right now, we're close to that, right? And Nasdaq's got a 1%, but the S&P 500 is 86
right.
bips today. So VIX has got to keep coming in.
Even if we're at 1%, that's the equivalent of the VIX at 16.
Right. So it should be coming down.
VIX now it's 17, 18. Yeah. Though it's down, you're right. If it breaks that support level that you're looking at there, I agree, we could be in the mid-teens pretty quickly. Now, there is still a lot ahead of us, right? There's going to be, for some period of time, some premium in the VIX, just like there's premium in some downside puts in the Qs and the S&Ps, just because we've got Iran on the table, we've got tariffs on the table, so there are things right there that in a moment's notice, we could see a 2-3% move in the market. To me, that's what's keeping the VIX elevated even to where we are now.
Tomorrow we got jobless claims in the morning, the kind of main piece of data. Yesterday we had consumer confidence that looked good, a surprising one that's been tough to really push. I thought that was notable, Scott, that we got consumer confidence to beat yesterday. It just, there is a lot of the things that you're talking about that could be those kind of risks. To me, a lot of them fall into the category of the subject matter that is so tempting for sensationalism. That Citrini post that was going around.
Sure.
CNBC yesterday I was watching, there's a lot of like breathless AI, hyperscaler, what if this, what if that? And like, it's technology. Like,
you're right, but that kind of fintech talk, whether it's on the network channels or whether you see it on FinTwit or whatever, that causes some of this volatility that we're seeing in the marketplace. So that may not be,
it's a type of volatility that I love to fade.
Exactly. I was saying it's not really, indicative of the underlying fundamentals, I don't
Exactly.
think.
Yeah.
Yep.
The underlying fundamentals is earnings and the valuation for those earnings, and that's what we're going to find out tonight for NVIDIA.
Yeah.
Strong view. So we've talked about NVIDIA. I'd be curious if you got thoughts, but generally, Scott, the idea, back to our main point here, which is if the VIX breaks down, NVIDIA rallying after its report could easily be a reason for this VIX line to break. But of the whole universe, what would you like to look for? And by the way, we've got your QR code up here today for your MAP trading system. So maybe this is kind of when it intersects. If volatility breaks down, if I were to tell you, I know this VIX line is going to break and we're going to have risk on, how would you figure out where you want to go?
Yeah, well, if that does break there, that really leaves a lot of upside to the market. It really does. 7,000 will be a thing in the past here in the S&Ps if that trend line breaks, because that kind of goes hand in hand with what you're looking at that support in the VIX. So what I'd be looking at and what this MAP system is all about that I follow, and let me just be very specific here, okay? From any guru out there, okay? Anybody that's been trading as long as I have for 35 years, okay? There is no holy grail, right? There is no perfect system out there, okay? It doesn't exist. So what you need to do is put probabilities in your favor. You need to put the math in your favor. You need to put the technicals in your favor. So that's what the MAP system is all about. And I break it down into 3 steps. Analysis, looking at trend lines. Or the second part of it is, what is the market anticipating? How do we figure that out? The option market tells us what the expected moves are based on where volatility is at any one time. And then the P part is placing the trade based on, what we've analyzed. And too many people, even too many gurus, want to get so fancy with the type of setups out there when you're trading options, less can be a lot more. When I talk about less, simple call spread, simple put spread, sure, there's any number of ways you can skin a cat, trading options. Less is more. So if we break that, Oliver, we're going to see a rip higher. We're going to see a big rip higher in the market.
Leaving 7,000 behind would be a pretty big deal.
I'd love to see 7,000 I'd love to see 7,000 as the new support rather than the resistance.
Exactly. Old resistance to new support would be the best bull setup you could ask for here. Scott, a sector I know you're looking at, will end on one other specific, the banks. Banks had a really interesting past couple months. They ended 2025 with a bang in a good way, and they started 2026 with a big reversal. And today coming right back to test an important line on my chart of the XLF. Tell me what you see.
It doesn't lie, right? It tested that. It bounced from there. Is it going to continue? I think the banks look great. Maybe they got overextended going into the earnings, but JP, Goldman Sachs, especially the big ones, they had really, really solid earnings. They had really good guidance. In fact, I think some of the rally today in JP specific is that their investment banking side of things it's gangbusters. So I think the banks got hit way too much. I can't say we're going to continue this rally on a daily basis here over the next several weeks or so, but that is certainly a sector that I want to be long over the next 3-6 months.
Okay, nice. JP Morgan finding some support. Looks like XLF trying to reclaim lost ground. The MAP system for Mr. Scott Bauer, Prosper Trading Academy. Jay Soloff was telling me you were a beast in the Amazon pits. Like we talked about day one of this show, Scott said you were the man.
That's right. Yeah, Jay witnessed a lot of things. He was there firsthand. He witnessed a lot of things.
All right, say no more. That's our cue. See you, Scott. Appreciate it.
Have a good one.
Great way to close our show. Mr. Scott Bauer, Prosper Trading Academy. All right, we're out of here. Good luck on NVIDIA. We'll be watching it like a hawk. I will see you tomorrow, 2 p.m. Central Time, of course, here from Chicago. Have a great night.